Hi, and welcome to the Market Alert for Thursday, the 1st of December 2022. Well, whatever Powell said last night, it certainly triggered, as it says in this headline, greed. Even the German DAX moved up 200 points plus on the electronic market last night. Shorts carried out on stretches. The move was so vicious to the upside. US stocks rallied after Fed Chair Powell signalled a slower rate hike in December. That's all it took to ignite a massive move last night from 6:30. Stocks surge on Dovish Powell into month end. So that puts the Dow back into bullish territory. Other news today, what we got, core PCE index, that's out at 130, unemployment and ISM manufacturing. It's irrelevant now because he set the tone for the Santa rally to continue all the way through into the end of this month and possibly into January as well. And particularly in December, if the next FOMC, which is probably not next week, the week after, if he cuts rates only by 0.5% or 50 basis points, then that will certainly send the market moving much higher once more. So that's where we're at. Let's just have a look at the implied volatilities. I've managed to get these into 3-month, 12-month and a 6-month chart now. Kicking off with the 3-month, we can see the market's reaction yesterday down as the market piled on the points last night. In the 6-month charts, you can see where the sort of the baseline is of where we can expect the market to top out, and we're not there yet. And in the 12-month chart, even bigger look back there at where we could come down to. So the 16% area before we see any major correction in this market. So without further ado, let's have a look and see what happened to the markets when Powell opened his mouth yesterday. So kicking off with the Dow, well, it's plain to see, isn't it? We just absolutely powered to the upside yesterday, taking out the high in resistance to the left that we've had for a few days there at 34,380. We've got a new high now, or immediate high at 34,598, so 34,600, which no doubts will be taken out with ease during today. Like I say, the tone's set. Let's step back a bit, have a look at the weekly chart. We've got through the resistance that we had to the left there at 34,287, and if we are to see the next upside fibs, will go from the next swing on the upside to the downside, 89 at 34,733. So keep an eye on that one if we get through the 600 during today. What is this number, just in case we continue with follow through today? 35,492. So yeah, I mean, we're certainly going to 35, aren't we? It's not that much, only 500 points. And you have to see what the market did yesterday. Monthly charts, we're around through the 62% retracement. So 78 again takes you more or less to that 35 area. 30-minute chart, there's your explosion to the upside. Absolutely massive. And let's just have a look and see what that move was. It was a blistering of 962 points. On comments that he wasn't going to raise rates as much. That's all it required. Sent the dollar to the downside, which we'll look at shortly, where you can see the market's holding overnight. It's only going one way during today. May have a bit of a shakeout to the downside, make it look like the news is being discounted, wrong foot the traders, and do as it said in those in the headline last night, where the shorts carried out on stretches. I bet they were, because that was an absolute pummeling by just a few comments. Incredible, isn't it? Let's have a look at the German DAX. The DAX also moving back to the highs. I don't know whether it got through. I suspect it did. But we've got a new high overnight, which is why we haven't got the pink line off this bar or the end of yesterday's bar, because the high's already been breached, which we'll look at in the 30-minute chart. But there you can see we've taken out the high to the left, where it was a bit of a struggle, where we had some selling, and we're just back below that at the moment. But again, I wouldn't worry too much about that one. as the market is likely to extend its gains today, particularly if the PCE news comes in lower as well. At the 20 bar moving average overnight in the 30-minute chart, we came back 89% from this high to here in this channel. Market stopping right on it and has now moved lower. But you can see the high was taken out, which is why it's not showing in the daily chart, but the market finding support at the 20 bar moving average at the moment. In the 5-minute chart, there you can see prices yesterday morning, 7.50 we had the futures. Market came back and then we went higher straight off the cash market before we actually then tanked back down to the DP. And you can see how the DP held the market, but we had lower highs, as can be seen there, as the market came back, both retracing. Well, not this one, certainly wasn't a retracement of 89, 50% retracement there, but an 89% retracement there. And then news at lunchtime, before the market just traded sideways and waited for Powell. And overnight you can see the move there, spiking to the upside and then just trading up on the electronic session. At the close at the moment, as we look into this in more detail, and again, no major selling around at the moment, but then it's only 25 minutes to 7 a.m. And trades for yesterday, you can see we're up to 531 for the week so far. Profit factor of 15.22 there, and 65-35 win-loss ratio. So far a good week. I didn't do any of the trade last night as I was missing in action, which is a shame because it was some good moves, but incredibly volatile at the same time. In the S&P, this driving through the 89 where the market struggled, and also the 200 MA, you need volume to get through these resistance areas, and that's precisely what we saw. They had the excuse to do it, and the market just drove higher, as you can see there. Lots of volume in the smaller time frames, started to drop off with a bit of selling en route. This was absorbed, and then the market continuing to move to the upside. Need to take out the 4,090 level to get to that 100 during today. In the FTSE, well, it just continues, doesn't it? Straight line up, and also note the amount of resistance that we have here. Let's actually just look at a weekly chart of the FTSE. We haven't done that for some time. Let's see where we are. We're at 89% retracement now, but we've just got through the 50 EMA this week. Well, yesterday evening really is when the market got through this. So yeah, again, continuing to move up. We've got the market becoming overbought. That's the S&P weekly. Let me have a look at the FTSE weekly. Apologies there. It was I thought it looked a bit odd. Yeah, so the FTSE also trading to through the 89. Let's just have a look at this recent one here through there as well, which is obvious to see. So we've got resistance. You can see all of this resistance here, which is showing up in the daily chart there above there. So it brings it through so that we can see where it is. So a lot of resistance in the 7.6 area and above for the FTSE. In the currencies, GBP JPY, after moving higher yesterday, was down, or is down, on the overnight, currently just below the 62% retracement. There you can see the move to the upside, drove through the 200 MA and then was hit with selling, and then overnight this is continued and passed yesterday's low as well. So expect a bit of a bounce here in the GBP JPY. The pound dollar moving back up as well, closing above the 5-bar moving average. 30-minute chart, again you see the explosion to the upside as the dollar came under pressure, already through yesterday's high. Let's have a look at the monthly chart of the pound. Currently we're just at through the 89% retracement there. So let's draw in some more fibs to the upside, and 62 is the next upside target. We've also got some selling at this level here where you've got the 5-bar and the high of this bar as well, which is September, isn't it? No, it's August on this bar. So again, watch for the 124 47 area. In the US dollar, down sharply yesterday, down on the overnight at the 200 MA, which I've spoken of before. It's a long time since the market's been down to this level. As far as the dollar is concerned, 30-minute chart, you see the move to the downside as the Powell takes his foot off the interest rate pedal. Gap down overnight as well, and also at the S1. So the market may attempt to try and bounce a bit, as you would expect, but at the moment, a lot of weakness in the dollar. This has lent itself to the silver market, getting through that 200 MA, which we spoke of yesterday, the 2150. We're actually through the 22 now as well, and the high is 2243. So again, we can see that silver taking advantage of this. And in fact, if we go to the gold-silver ratio, you will see this plummeted yesterday to 79.80 as the market came as this market came back, but obviously the acceleration in the silver price was far superior to that seen in gold, which saw the market move higher. It's continuing to move higher overnight, playing catch-up as well against silver, which you can see there. So big move in gold yesterday, and back off the high overnight as well. It's bounced off the high and continuing to move to the upside. I'll have to look at some of the bigger time frames in these two markets as we go forward as well to get some longer term perspective. But I expect a bit of pullbacks in these markets. They won't go vertical just yet, probably from the new year, as Powell then goes down to 0.25% rate hike. He's not going to stop increasing rates, but he's certainly going to take his, like I said earlier, take his foot off the pedal a bit with regards to them. So there we go. Let's see what happens today. You tend to get a follow through on a second day of this sort of crap that you get from the Fed. So let's just take advantage of it. Right, that's it for this one. As ever, thanks for watching. See you in the next.